NDTV Profit, and I'm Nupur Talwar, Suri. Now, SEBI has taken action against industrialist Anil Ambani and 27 other entities in the Reliance Home Finance case. Now, the market regulator has barred Anil Ambani from accessing capital markets and imposed a penalty of 25 crore rupees on Ambani and restrained him from being associated with the securities market and being on the board as a director or a key managerial personnel in any listed company. Sajeet Manghat is joining us to put this into perspective first, and we're also going to be joined by Shriram Subramanian. He's the MD and founder of InGovern. Mr. Subramanian, good evening. Thank you for joining us. We'll just come to you in a bit. But first, Sajeet, to you. Tell us what's happened and also put it into perspective in terms of the impact of it.
So, the market regulator, Securities and Exchange Board of India, has been doing an investigation on Reliance Home Finance for last couple of years, and this was on the back of allegations made on siphoning of funds and and there's governance lapses at the home finance company. Now, based on that investigation, SEBI began its investigation into the books of it, and they found that there is siphoning of funds which have happened. There has been diversion of funds to group companies without due process and approvals in place, and as a result of that, there has been a huge losses to the company, leading to the company going into insolvency. If you look at what SEBI has done today is the order which basically says that Anil Ambani and 27 other entities there have been action against them, with Anil Ambani being barred from accessing the capital markets for the next 5 years. He's also barred from being on the board of any of the listed entities or their associates or subsidiaries, and he also cannot be a KMP, which is a key managerial person in any of the entities which are being governed directly or indirectly by the regulator. So it's a big order which has come into against Anil Ambani, and as a result of which we've seen some of the Anil Ambani Group stocks been hit hard today, whether it's Reliance Infra, Reliance Power, or Reliance Home Finance.
Now, Sajeet, also give us a bit of a background of how this was arrived upon.
So, what we understand from the order, and the order is very elaborate. It says that it is basing its investigation, and SEBI said that there are two forensic audits that have been done. One is the PwC one, which has been done, and the second one which was done by Grant Thornton. Both the forensic audits very clearly stated that a large amount of money. If I take the PwC audit there, it says that in the year FY 18-19, nearly 14,577 crores of money was disbursed by Reliance Home Finance, of which 12,450 crores went to entities directly and indirectly controlled or linked to Anil Ambani. They are calling it as a potentially individual labeled entities, which basically means they are related to Anil Ambani there. Of that, as of now, there are still outstanding of over 8,000 odd crores, and of the 8,000 odd crores, nearly 2,700 crores have become NPAs. There are allegations, and SEBI has said that there are many loans which have been given to some of the entities like Reliance Power and Reliance Infra or related entities there. So initially, before the loan, they were related party entity, but at the time of loan, they reclassified them as non-related party entities, and then they went ahead and gave the loans there. It also says that there has been a board resolution or board decision which was taken not to further lend to many of the entities, but it was overlooked and overruled by Anil Ambani, who was the chairman of the Ambani Group. There, it says that loans worth hundreds of crores given to companies with no assets, no cash flows, and net worth, or even no little revenue which was there. As a result of which, there has been a huge loss to the shareholders, but also to some of the financial institutions who had lent money to this housing finance company. What is very clear is that a lot of money was given away by Reliance Home Finance as working capital loans, which basically means that these are more or less unsecured loans which is there, and as a result of which there were losses or provisions which were made by many of the NBFCs or banks, because Reliance Home Finance ultimately ended up in insolvency.
Right. Sajeet, do stay on with us. Now, let's go across to Mr. Subramanian. Mr. Subramanian, what are your initial thoughts on the order that has been passed by SEBI?
Good afternoon. I think this is long overdue. If you see the groups that have had stress in the last 10 years, only ADAG group was something that had gone sort of scot-free, I would think. So from that perspective, I would think while the street knew that ADAG group was under stress, there was no SEBI order or any other regulatory investigations, etc. So this is, I would think, the first of many more to follow, if anything.
You are an investor advisory company. What was the kind of advisory that you would have given out to investors? Because as part of the investor activism, you are very active. What is the kind of advisory that you would have given to investors of, say, Reliance Power or Reliance Home Finance or Reliance Infra? Because at the end of the day, all these companies are ending up either selling off their assets or going into insolvency.
See, this is obviously no institutional investor currently has any significant shareholding in any of these companies. But long before itself, in many of these conglomerates, one has to be watchful about. One is the related party transaction. What is the cross holdings? And as you said, these are shell companies that were created to tunnel the funds from a home finance company where leverage could be higher and borrowings from banks and NABARD and other financial institutions, and then tunnel the funds through these shell companies to the companies that needed the funds, which were capex intensive, where projects were delayed, etc., etc. So at the end of the day, when those projects did not fructify, the impact is all the way back out here. So the stress is somewhere else, but the funds are in the home finance company, or at least you have the ability to raise funds from other banks, and then you channelize these funds to the stress of other group companies. And there is no ability to repay all these, and that's where the NPAs show up.
SEBI calls Anil Ambani the mastermind of fraudulent scheme for siphoning off more than 8,800 crores into group companies or entities related to the group. We haven't seen any criminal action being taken against the group or the companies or the promoters here. In other cases, we have seen banks rushing to file FIRs. There has been losses which have been filed, and in many cases, the promoters of those companies are languishing in jail, or either they have left the country or they are in jail. Why do you think we haven't seen any such action from the financial institutions in this case?
Yeah, possibly they are giving a longer rope, but at the end of the day, someday this, as I said, could be the start of that action, I would think. This is just the first step towards it. Unfortunately, many groups have gotten away with it. Future Group is another group that comes to mind. Yes Bank and ILFS and Kingfisher and UB Group, that is, etc., etc. You saw the promoters get the sack, be either in jail or run away from the country, as you said. So all these are, I would think, actions that could happen even in this case, because the amount is obviously it will be challenged in SAT, but I would think that it's the logical conclusion is that there will be a follow-up action by many of these financial institutions, because they have a fiduciary responsibility. The moment a regulator has shown that so much is a loss for a financial institution, they have a right to pursue and try to recover the funds that they have lent to Reliance Housing Finance.
Now, the SEBI order very categorically states that it is also depending upon two forensic audits done by one by PFC and one by Grant Thornton, and the Grant Thornton one, if I'm not wrong, it was done on the behest of Bank of Baroda, which was a leading consortium partner there. And in both the forensic audits, it's been very categorically concluded that funds have moved out from the Reliance Home Finance to entities related credited to the ADAG group directly or indirectly through a web of companies, and at the end of the day there has been a loss, and NPAs which has been declared on many of that loans which has been given, as a result of which forced the Reliance Home Finance to go ultimately file an insolvency there. So if banks forensic audits are already talking about some siphoning of funds and loss to not only to the shareholder but to the bank depositors as well, why hasn't any action been taken?
Yeah, I would. One should even fault the banks for having lent so much money. At the end of the day, if you open the balance sheet of any housing finance company, almost 90-95% of the assets would be collateralized, because it's a housing finance company. That means the debt, there should be a collateral behind it. And in this case, more than 90% of funds disbursed by the home finance company seems to be general working capital purpose, which is non-collateralized, as you rightly said. And so from that perspective, banks who were continuing to lend to the home finance company didn't even scrutinize the balance sheet of this home finance company. So to that extent, they are also at fault. And I would think now they have to go hammer and tongs against this and try to recover as much as possible.
What about the governance point of view? Because the board of this company is also as much responsible for this, right? Means you have requirement of having 50% independent directors and remaining other executive directors which are there. You are getting off by just paying a few crores as penalty. 25 crores is the penalty which has been imposed when in the total NPAs as a result of this is more than 2,000 crores, and more than 8,000 or 10,000 crores have been dispersed to various entities through multiple web of companies.
Yeah, I mean, at one end, the board is also to fault. At the other end, the SEBI order itself says there was this one directive by the board not to sanction loans to ADAG group companies, but at the executives, that's where the executives have also been held responsible, which is the CEO, CFO, etc. And the executives signed off and or dispersed the loans to ADAG group companies, though the board did not approve those.
SEBI, on a very categorically mentions Anil Ambani and the role that he played. What do you think, should have been the role of the chairman of the group? Though even though he was not a KMP or a director on the board of Reliance Home Finance, he was, if I'm not wrong, his kids were on these companies' board, and later on they exited the board as directors. So, does the responsibility just falls on Anil Ambani, or it is goes to anyone who was the director at that point in time?
I would think it goes to all of them, but in all these promoter group companies, the promoters think that 100% of the cash is theirs, and they would channelize it as and when they want, without due process, without taking board approval. So to that extent, yes, I mean, the board is also responsible, especially if they are related to Anil Ambani, though they may be KMP or not KMP. But the executives already SEBI order has named them, and they have been fined. But more importantly, the SEBI order itself says that the ultimate beneficiary or ultimate person responsible was Mr. Anil Ambani and his group of executives, key executives.
Final question to you. There's a personal insolvency also filed against Anil Ambani by State Bank of India. We haven't seen much movement on that. It was filed in 2020, and there hasn't been much movement on that. Do you think that it's time that the NCLT and the bank pushes ahead with that? And what could be the kind of outcome that can come out of it?
No, that's what I would think, as I told you at the beginning itself, that this SEBI order should be taken by the banks and other financial institutions seriously, and they should do their fiduciary responsibility. They have given already a very long rope. They should pursue the cases in NCLT and otherwise. There is IBC process. They should pursue it to their logical conclusion. Otherwise, they're not adhering to their fiduciary responsibility of recovering funds, even though there could be fraud or anything elsewhere.
Absolutely. Mr. Subramanian, thank you very much for joining us. And Sajeet, thank you to you as well for bringing to us the details of the big story that we're tracking here on NDTV Profit. Well, we slip into